Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB this Thursday afternoon. I'm Juliette Sarli. Great to have your company. Well, let's have a look at what has ended up being quite a choppy day's trade. We're up about 0.2% there on the CBO 200 as we round out the day's trade, but the ASX 200 is only up by around 6 points. As you can see, we had a very solid start to the day's session on the back of that rally. We've seen lift global markets ahead of the Thanksgiving Day holiday, but there was a bit of selling at around 2 or even 3 p.m. Sydney time. It looked like we might even close slightly in the red, but we have managed to bounce back to about a 0.2% gain or a pretty flat finish on the ASX 200. I guess people not really wanting to take on too much risk ahead of US markets being closed for the Thanksgiving Day break. And we've also seen a big drawdown in a lot of the energy players today, particularly led by Santos. So that has taken a little bit of shine off the market. Adam Dawes from Shaw & Partners will join me in a couple of minutes to tell us his thoughts on the day's trade, but certainly a flat finish. We'll get into the insurers as well. A lot of those natural hazard claims affecting them, and then of course the holiday halt ahead of Thanksgiving. Having a quick look at what sectoral moves we saw today. There, the insurance players, of course, we'll get into the main reasons as to why we saw quite a bit of weakness coming through in some of those in a moment. But let's have a quick look at the gold stocks as well. Pretty well supported. Deutsche Bank calling for $5,000 for gold in 2026. That'd be an upside of about 20% from where we are now. Newmont up by more than 2%. Genesis up 2.3%. And then a quick look at tech stocks. WiseTech having a good session on a revamp of its board, up by more than 7%. Zero Tech One and Zip also looking good. NextTC though heading the other way, but of course those tech players were firmly in focus on Wall Street. Well, QBE announced a $450 million share buyback after posting gross written premium of 6% over the 9 months to September. Shares though fell 3.5%. It was Suncorp though in particular with this concern about natural perils claims. It's got a full year natural hazard budget, I guess if you want to call it for that, about 1.8 billion. It's already up to 1.1, 1.2 billion due to the fact that we've had so many natural disasters and this supercell storm that hit southeast Queensland and northern New South Wales. Suncorp saying will cost it around $350 million. It's already received more than 10,000 claims, and it says that they are pretty much half-half between damages to cars and damages to homes. WiseTech there, we mentioned, up by more than 7%. Raylene Murphy has been appointed non-executive director. See what adding a woman to your board will do to your share price. National Storage extending its share price gain as well after confirming an unsolicited and non-binding proposal from a consortium including Brookfield and GIC. And Ryman Healthcare, though, its CEO says they've turned an important corner, but shares were a little bit weaker. All right, let's make sense of it all and welcome to the COB, Adam Dawes from Shaw & Partners. Adam, did I get it right? What do you think happened in the last couple of hours or so that saw that really solid lead dissipate somewhat?
Yeah, it did, didn't it? And I think, a little bit of risk off for some of that side of things is especially potentially what I think is going to happen. And, it's just great to see some of our tech stocks today actually start to make some headway, make some ground. And I really like your comment there, Juliette. Put a woman on your board and then just see how it goes. And I've never seen a stock react like that to a non-executive director coming on. But look, it's great to see WiseTech potentially starting to get a little bit of a footing back there as well. But yeah, I'm not too sure why we, fell away in the afternoon. I know that the US futures have been a little bit soggy, so maybe a little bit of profit taking. And it's just, we've had a couple of good days this week, so I don't know. But it looks okay, and certainly some of our resource stocks yesterday had a good day. Today, just a little bit struggling there as well. So it's a bit of a game of two halves, I could potentially say today.
Indeed, and that was me editorializing somewhat, which I shouldn't do as a journalist. But there's a lot of research out there. You put women in leadership positions, see what happens. Anyway, enough of me going down that route. What about what we're seeing with these insurers? I mean, a bit concerning when Suncorp's getting close already. We're only in November to what it's budgeted for all of full year 26.
Well, look, we know, especially for the insurers, look, we understand now, obviously, but if you don't believe in climate change, you can definitely believe in that the natural disasters are increasing. There is more and more of these things going on. So this is, certainly what I think overall Suncorp is dealing with all these flash, lightning storms and hail damage and all of those kinds of things and those natural disasters. Now, insurance companies do provide or provision for these natural disasters, but if they go over those provisions, like you said, it is going to then, potentially crimp on profitability. And then there's obviously the reinsurers as well, and certainly QBE with their numbers that came out today, which I thought looked pretty good from the outset, but then you actually dive into the detail. And it does show that the insurers are reducing premiums. They're in a cycle of reduction of premiums versus hiking premiums, which we've seen over the last 3 or 4 years now. So that cycle is turning. So I'd be careful in the insurance space. I actually sold a fair bit of QBE today for clients on the back of that trend that we think is going to happen over the next 3-6 months, or even a year. That premium cycle is on the downside going forward. So I think be careful in that insurance space at the moment.
Yeah, let's have a look at the retailers. We know Black Friday sales are coming up, and in fact they've been going for about 2 weeks, it seems, already.
It's crazy, yeah.
It's insane. Everything is apparently on 60% off. I was also really taken by what happened on the China market, because Beijing announced new measures to boost spending. Pop Mart, the Labubu maker, up another 10%, putting, I guess, a burst to the fact that it's reached peak there. But what are you seeing more broadly in retail?
Look, I think overall retail is looking okay, and certainly there's some really good ones out there. Universal, Lovisa, those kinds of guys, and those businesses, and obviously JB Hi-Fi getting a bit of green as well. Temple & Webster was probably the canary in the coal mine from yesterday. They did come out and they said that their obviously profitability was lower, and their stock had absolutely hammered down sort of 20%. A couple of guys on the desk today were sort of buying it for a bit of a rebound. But overall, I think consumer confidence has started to rise a little bit. That is not in what potentially the CPI numbers, and then potentially no interest rate cuts, and we might be looking for an interest rate rise. That's going to hurt consumer confidence going forward. However, I think this Christmas we will look at some pretty good numbers, and pretty confident that the retail space should do okay this year. We've still got lots of savings, and people are continuing to spend at the shops. And certainly on a Thursday night, I went out with my daughter yesterday in the Westfield, and it was packed. It was really busy. So I think the confidence is there, consumer confidence there, but that interest rate issue is probably going to be something for us to worry about in January, February in the retail space.
Isn't it kind of our fault? We're all spending too much, and therefore, that's probably going to mean there's not a rate cut. And to that point, what does that mean then for the market, for the REITs?
Oh, for the REITs, what does it mean? Well, obviously means if there's no rate cut, then the REITs will probably stabilise, or if not fall to a degree. So you've got to be a little bit careful there. I think it's not your fault or my fault, Juliet. I think it's the boomers, right? I think it's definitely the boomers that are cashed up, sold a property, living large, and that's what's really moving this inflation number. And I don't want to point, fingers at anybody, but it's not you or me, that's for sure. So, look, I think overall the REITs will look stable. They will be okay, and they've had a fairly decent run, but there's been some laggards there. Lend-Lease still can't get out of the doldrums. And the office space has still been a really bit tough one as well. I do like Centre Group, though, for that retail REIT space, and I think that's not a bad one. I did some buying in that last week just to sort of carry that through, because I think the numbers are going to look pretty good over Christmas, and that's probably not a bad space to be playing in if you are interested in the REITs.
Yeah, all right. Well, it could be a little bit of my fault. You don't know how much online shopping I do. All right, let's...
Well, if it's my wife, she does a lot of online shopping. So, yes, you're probably right.
Right. Well, then I'm just hurting myself in terms of, if there's no rate cuts. And so just more broadly, what do you think about, where we are in terms of valuations and where we go heading into 2026, particularly given, there's the two sides of, is this what we're seeing, the rally on Wall Street, just Thanksgiving Santa rally based? Are there still cracks underneath? What do you think?
Look, I think that there's a couple of things. One is that interest rates in the US are touted to what's 50-50 chance that they're going to have a December rate cut. So I think, the market is probably gravitating towards that because 2 weeks ago it was about a 20% chance that they might be doing a rate cut. So numbers have come up a little bit on the back of that. I think our market, Australian market, is going to be tough next year. We're still going to continue to struggle. We've been moving a lot of money out of the Australian market into international markets in the US and emerging markets. That's where we think the growth is still going to be next year. I still think the US will continue to do well next year, but it will be volatile. So I'm not calling for, sort of a full bear market next year, but it will be volatile, and you need to sort of be able to sort of pick the right managers or pick the right stocks in that space. But we have started, and we've been doing it pretty much all year, has been moving away from Australia and putting more global funds into clients' portfolios, because I think that the US as well as emerging markets will continue to move forward and really do quite well. Australia's probably going to struggle on an earnings basis. We've been negative earnings for the last couple of years. This next year is not going to be any different unless we see the US dollar falling and we see our commodity prices starting to rise. Then the Aussie market will do well, but it's going to be tough. And I think everybody should be definitely looking overseas for the growth for next year.
All right. Thanks so much for your time this afternoon, Adam. Adam Dawes there from Shaw and Partners. All right, the stock of the day was Judo Bank, and on the call we heard from our experts Andrew Wallant from DP Wealth Advisory, Howard Coleman from Team Invest.
Do like the fact their NIM, their net interest margin, is over 3%. Most of the other big banks are, in the high ones, very low twos. So that NIM is attractive. The niche specialisation relating to small and medium businesses is attractive as well. But as you just said, we've seen that spike in the share price on the back of that Macquarie note. On any weakness, it'd be absolutely one that I'd be having a look at. But right here, right now, today, it's a hold.
I'm personally very enthusiastic about it.
So would you buy, hold or sell
Well,
today?
I've been watching it. I've had it on my watch list. I'm sort of looking at it and thinking, when do I want to buy it? And my thinking was, when we have a number of down days or weeks on the stock market, which happens every now and then, people are getting a bit negative, that'd be the time to consider buying a fair bit.
So we'll call it a hold today.
Yeah, I wouldn't make it one of my biggest holdings, but I'd certainly be prepared to buy.
Thinking about your pre-Christmas shopping? What if you could buy some stonks on sale? Our final virtual event for the year is Cyber Monday. Join expert analysts live as they share their picks of undervalued equities.
We're looking at between 400 and 500% upside.
Because it is going to rally away very, very soon.
Beat the Christmas rush. Register now for Cyber Monday at ausbiz.co/cyber.
All right, so many sales coming up. Well, let's see what stocks are potentially on sale today that people bought. HMC Capital up 9.5%, GQG Partners, Digico Infrastructure REIT, WiseTech, we talked about that with adding a female non-executive director, shares up 7%, Light & Wonder up almost 7%. To the downside today, we saw Drone Shield, a little bit of profit taking coming through there. Remember, shares have been up about 25% over the last couple of sessions. Harvey Norman down by 3.7%, QBE, of course. Even its share buyback, not enough to lift that stock today. In the small end of town, we saw Golden Horse Minerals up by an impressive 18%. In fact, it looks mainly all of the resource energy type stocks there. And having a look at some of the laggards in the small end of town, EZZ Life Science down by about 19%, Felix Gold down by 7%. Well, US financial markets closed tonight for Thanksgiving. We'll be looking, of course, to any further reaction, though, from the UK budget and moves there in currency markets. Let's have a look at the day ahead tomorrow. Private sector credit for October. Centuria Capital and Hyperion X hold AGMs, and over in Japan, the unemployment rate and retail sales being released, which is, of course, important as we continue to monitor what could happen in terms of any potential moves from the BOJ. Let's have a look at where the market has finished. Look, at one point I thought we might be in the red or pretty flat, so we're up 0.2%, not too bad on the close. certainly not as positive as it was on the open. The ASX 200 has managed to climb another few points since 4 p.m, so it's up 11 points on the close, or 0.1% to 8,617 points. And really, I think when you strip out that 1.4% loss from energy, it was a brighter day apart from that big fall that we saw being weighed down by Santos and quite a lot of those oil stocks dragging on the overall market. All right, we'll be back from 9:45 a.m. Eastern to recap what happened on European markets. We'll see you then.